Hello traders, welcome to the Nexoel Trading Hub YouTube channel. We're going to be carrying out a review on last week's first focus beginning with a DXY. This is actually going to be an in-depth market review mentorship program that's going to span from this month of August through December. So guys, let's head to the charts and look at the dollar index. This is actually the weekly time frame. So we can see that this is actually our dealing range from the swing low points to the swing high point. So the expectation was to see that price actually takes out the buy side liquidity, since we're having price taking out the external range liquidity, which is actually this buy side liquidity. So we expected to see price push further to the upside to read this buy side liquidity. So we can see this is actually our dealing range. And we can see the reaction of price at the 50% of this dealing range. You can see that price returned and then mitigated this order block. We have the down close candle before we had the bullish move to the upside. So price created this bullish movement to the upside, but failed to read the buy side liquidity. And then we have this bearish momentum to the downside. Now we're seeing price being attracted to the sell side liquidity. So we saw this fair value gap from this particular candle week here. So we saw that price return into the fair value gap here and then mitigated the consequence encroachment. And then we can see that price closed above the fair value gap. So we expected to see further push of price to the upside before we experienced this last week bearish momentum to the downside, where we're having a down close candle. So what you're going to see is that this particular candle actually readed the sell side liquidity, mitigated the fair value gap, mitigated the consequence encroachment, and closed above the fair value gap and the consequence encroachment. So we have the read of sell side liquidity. So the market actually booked external range liquidity, be it the sell side liquidity or the buy side liquidity, and then the market now again book for inefficiency in the market to fill up any form of price imbalance. So we can see that the market took out this sell side liquidity as a swing low now and then closed above the swing low point and the consequent encroachment of the fair value gap. So we expected more bullish move of price to the upside before we look and frame the bearish move to the downside. So the question is why? First, let's look at this. The market returned to the 50% of this dealing range. Price dropped to the downside and then closed below the 50% of this dealing range, closed within the discount. So we can see that now price return to retest the 50% of this dealing range for more bearish momentum to the downside. So what we're going to see is that once price actually took out the sell side liquidity, so we expected to see price return to the upside to fill up inefficiency before we can frame more for the bearish move to the downside. Now, what we actually now saw in the charts is that price took out this sell side liquidity. So meaning we have a breakout zone here based on the weekly time frame. We have a weekly breakout candle here. So you can see that the breakout candle is actually large. So we actually regarded the volume of the weekly breakout. And now what we're going to see is the return of price to the upside. Price took out sell side liquidity. And now price is being attracted to the weekly fair value gap. And then we have a confluence of the breakout because this candle sponsored the move that took out the sell side liquidity. So we expected to see the bullish move of price to the upside. And you can see this was last week candle movements. Today is Saturday. So you can see that price closed below the sell side liquidity that price rated, mitigated the weekly breakout and the weekly fair value gap. So what we are now going to see is that price is being attracted to this weekly unmitigated fair value gap to rate the sell side liquidity. So now we can see that within the dealing range, we can see how price have been respecting the 50% level. Price gave the momentum movement to the downside, and price was reattracted back to the 50% level before the push of price to the downside. So what we're now going to see in a lower time frame, which is actually the daily time frame, you can actually recall from the weekly time frame that this is our dealing range from this swing low points to this swing high points. So you can see this is actually buy side liquidity, where we expected to see price push to the upside to rate this buy side liquidity, where you can see price failed to take out the buy side liquidity, and then price return taking out the sell side liquidity of this range from this low to this high point. So what we saw basically in the daily time frame, you can see this is actually that region where price took out the sell side liquidity, price return filled up this fair value gap, and then price pushed to the upside. So what we're going to see is, you can see the bearish momentum to the downside. Price took out the sell side liquidity. So we had this pullback of price to the upside before we see price for the push to the downside. So we expected to see that since price took out the sell side liquidity, wanted to see price take out this daily buy side liquidity and then fill up the weekly fair value gap, which is in confluence to the weekly breakout zone. So what you're going to see is in confluence to this weekly fair value gap and this weekly breakout zone, you're going to see that we have the daily inversion fair value gap. Because price created this fair value gap, price return mitigated the fair value gap and sponsored the bullish move to the upside. And then you can also see how this levels in the daily range in the weekly time frame, how price is attracted to that levels. So we can see how price reacted here, fell, price went to the upside, drop, reacted and dropped. We can see how price reacted here, dropped to the downside. Price was reattracted to this. Price was reattracted to the 50%. So we can see that we have the daily inversion fair value gap. We have the weekly fair value gap and the breaker. This is a very strong confluence that attracted price to the upside. And then you can see that we have the buy side liquidity. So price return after taking out sell side liquidity, price was booked by the fair value gap, the weekly breaker, and the daily inversion fair value gap. And now we can see we had the massive push of price to the downside after price took out the buy side liquidity. So what we're now going to see is within this daily inversion fair value gap and within this range, because you can see here we have the 50% level of this dealing range that we marked out in the weekly time frame. So we can see that price took out the sell side liquidity. So price was reattracted to the 25% level of this range from the 50% level to the 75% level. So price was reattracted to the 25% level within this range. And you can see the confluence of the fair value gap zone, the breakout block zone, and also the daily inversion fair value gap. And then we had the massive fall of price to the downside, where price took out the sell side liquidity being attracted by the fair value gap we have resting here. So we can see price return into that daily fair value gap. So within the 1 hour time frame, what we framed out is we saw this liquidity pools. Yes. And then you can see this is our weekly breakout zone. And this particular two lines you're seeing here are actually the fair value gap from the weekly time frame. And then this is the weekly breakout zone. So you can see we have pools of liquidity. And this was when price closed on Sunday. So we expected the movement on Monday to rate this liquidity pools. So you can see that when markets open on Monday, July 29th, by 12 a.m., when the markets open, we can see that price was attracted to the weekly breaker and the fair value gap to rate the liquidity pool. Price mitigated the weekly breaker. So within this zone, is the zone to actually frame our bearish momentum to the downside. So what you can see is that price pushed to the upside, took out the liquidity pool, and also took out the swing high. So we have a breaker block here because this sponsored the move to the upside that took out this buy side liquidity. So you can see we have the displacement to the downside, and then price closed below this low points. So we have a bearish market structure shift. Price left the imbalance. So just the way ICT would tell us to actually look out for the displacements, and then the fair value gap price leaves for price to come mitigate the fair value gap. So now what we can see is from this candle high point to this candle low point, we have the fair value gap, and you can see how price returned to the fair value gap, mitigated the fair value gap. So what price is attracted to is the sell side liquidity. So this is our Monday candle, price pushed to the upside. So price is now attracted to the sell side liquidity. So we frame the first entry here because we can see the displacement to the downside after the mitigation of the weekly breaker, the weekly fair value gap, the daily inversion fair value gap. This is actually a very strong institutional zone. So we can see again that price for the push to the downside gave us this fair value gap. Price took out this sell side liquidity. So price took out the sell side liquidity. So we're expecting price to be booked by any form of price inefficiency to the upside. So price was attracted to this bearish fair value gap. Then we can see price mitigated the bearish fair value gap. And then we further have the push of price to the downside where price took out this sell side liquidity. So price took out the sell side liquidity. So we're expecting to see price being booked by inefficiency, any form of sponsorship candle. So what we can see is price left this imbalance. Price took out the sell side liquidity. Price returned. Price was reattracted to the upside to fill up this fair value gap that price left. Now we can see that price fell to the downside, took out this sell side liquidity. Price returned to take out the buy side liquidity and face mitigation by this order block. Because you can see this is the up close candle before the down close movements that we experience here. So price was reattracted to this up close candle that sponsored the bearish move to the downside, and then price took out the buy side liquidity. So what we're going to see is price mitigated the order block, and you can see from this dealing range, from this high to this low, you can see that price was attracted to the premium level. So we can see price was attracted to the 75%, which is in confluence with this order block. So what we're going to see is that price returned to the downside, was attracted to the 50% level, and price was rejected again back into premium. And then we can see the displacement of price to the downside. So this was what we expected in the dollar index to actually see a bearish move. And then we dropped to the lower time frame and then framed how we could possibly execute our trade entries. So guys, if you want to stay updated with the coming episode in this mentorship in regards to the in-depth market review, so you can do well to subscribe to this YouTube channel if you're new to this YouTube channel and wish to be staying updated. So what you can see, aside from the fair value gap that we have and the up close candle where price was reattracted to, and then price gave the massive displacement. So the NFT sponsored this very massive bearish movement to the downside. You can see we have a confluence also of this 1 hour inverse fair value gap. So this also became a very strong institutional zone to look for the bearish movement to the downside. Price mitigated the weekly zone, the weekly breakout, the weekly fair value gap, the daily inversion fair value gap. Took out all sell side liquidity here in the 1 hour time frame. So we expected to see a massive fall of price. When price returned into the 1 hour inversion fair value gap, the confidence to mitigated fair value gap and the order block. So cheers guys, till I see you guys in the next episode.